Hey, welcome everyone to our UFirst Credit Union First Time Home Buyers webinar. Thank you for signing up. My name is James Hanson. I am manager over the marketing department here. If you guys have, before we get started, if you have any questions during the webinar, we love getting those questions. It helps us kind of answer whatever you wanted to have answered. Just put those in the questions tab and we'll answer those periodically throughout the webinar. Also, after the webinar, I'll be sending you an email that will have the recording. I think also if you've signed up for the webinar, we use GoToWebinar. I think they actually send you a recording as well. But either way, we'll make sure you get that recording either tomorrow. Well, since it's Friday, you'll probably be seeing that on Monday. So if you want to share this with your friends, you can definitely do that. That email will get to you early next week. So yeah, any questions, put those in. We'll send the email out. Now I'll just turn the time over to Heather Bollinger. She's one of our mortgage consultants here at UFirst Credit Union. She'll take over.
Hi, this is Heather Bollinger in the Mortgage Department. Thank you so much for joining us today. And I have with us here today Derek Power with Exit Realty. He's one of the most professional, kindest realtors I have ever met. I truly enjoy working with him.
Thank you. I'm blushing here.
But truly, no, I do really enjoy working with you. So thank you so much for joining us. Our topic today is we're mostly talking about first-time home buyer, but also if you haven't owned a home in a long time, it's a good refresher of things to be aware of when you are contemplating maybe buying and selling, or buying again if you haven't owned in quite a while. So we do have quite a few loan programs available, but today we're going to mostly focus on first-time home buyer with little to no down, or you could also be a home buyer who saved well and you have quite a bit down. So we'll go over the products that are available there. So our true first-time home buyer program is we can get you into a home for 100% of purchase price financing. You are required to have minimum of $1,500 out of pocket towards your closing costs and your escrow setup. The rest can either be from you, from a gift, or a seller credit to help you get into the home. Derek has actually brought us a lot of first-time home buyers using this program, so I'll let him share his experience.
You know, this is a fantastic product, and it's actually a loan type that is really well received by the sellers out there. That's one of the things I love about it. Now, honestly, there's a lot of different first-time home buyer loan products offered around the state. Most of those are going to be FHA loans. What I love about the credit union's first-time home buyer product is it's a conventional loan, still a conventional loan, right?
It is. So
got to double check there.
Yeah.
We've only been doing this for what, 5 or 6 years together, and wouldn't it be funny if it had switched today?
Yeah, he just got his program about 5 or 6 years ago. Yeah.
Anyway, sellers love when we're approaching them with a conventional product over an FHA product. It just works better for them. So one of the things first and foremost that I love about this is if we're competing with other buyers for the same property and they are doing a similar loan type, but theirs is an FHA product, we tend to beat out right up front just being conventional. So I love that about this product.
So an FHA loan is a good product for someone who needs it, but the guidelines on the appraisal are a little more strict. So I would think that's probably why sellers are a little more excited to know that this is a conventional product.
And their agents are a little bit more excited.
Yeah.
So because we know that the sellers are going to be listening to their realtor, and so that's one of the things that I really love about the product. Also, what is kind of unique about this product is that well, I guess really that's probably the thing that carries the most strength for most sellers.
Yep. So it has no mortgage insurance, and it has no funding fee that the FHA has. So your costs are going to be lower. and hopefully your payment's going to be lower too. When it comes down to it though, once you are under contract on a home, then we can also take that home and see what makes the most sense, which products. So we'll compare them all and see what makes the most sense for you at the time that you're truly ready to purchase. So, all right. I get asked all the time, when is the best time to buy a home? And my answer for decades now has been when you are ready to purchase a home. Don't worry about what the market's doing. Don't worry about what rates are doing. Look at your personal life. When you are ready to buy a home is the best time to buy a home. So we'll go into a little bit about kind of the steps when you are ready. First step is you're going to want to reach out to a mortgage consultant, and we are not going to pull your credit immediately, because a lot of times that's the first question people ask me. We're going to have a conversation. We're going to talk about your life, what you're looking to do over the next 2, 3, 5 years, what makes the most sense for you, what's your current living situation, what is your current housing expense, what are you budgeting for a new mortgage payment. So a lot of thought-provoking questions, and then just us getting to kind of build a picture about what makes the most sense for your life. And then once, let me have Derek add to that, because he also has people call him before they call a mortgage consultant.
They do. That happens a lot, and I think it's a fair. I mean, where do you start, right?
Yeah.
Fortunately, they either call me or they call you.
Yeah.
so those are the first 2 steps, though. I will often recommend when somebody reaches out to me, we of course will talk, and I want to know a little bit more about them and what they're thinking. But I do always try to get them in front of Heather, because we want to understand where you are and what you might pre-qualify for.
Mm-hmm.
But in addition to that, I love to sit down with people in person right up front. I like to have an in-depth conversation with them about them, because that's why we're here.
Right.
That's why we're a team. We're here to serve and support you. I want to know what your dreams and what your goals around home ownership are. Part of that conversation will also include me helping you to understand what the current real estate environment is like. I really want to educate you. I want you to walk away from that meeting knowing more than any other buyer who you're going to be competing with what's going on in Salt Lake County or Utah County or wherever you're looking, what homes are doing. It really helps to prepare you in that regard, so that when we do find you that right home, you're ready to make the important decisions that you need to make as they relate to that offer.
So once we've determined that, and you've determined that, yes, you are ready, you're in a financial position that you're ready to move forward, everything's lined up with your life, that's a good time to buy a home, then we'll move to an application and get the straight answers of what you qualify for. And then I will give you what I call the Willy Wonka golden ticket, the pre-approval letter. With that, now a realtor will give you the time of day. And because they don't want to be making offers on homes for someone who doesn't qualify. You need just being respectful of your time, agent's time, the seller's time. So you want to make sure that you're shopping in an area that's going to be a payment that you're comfortable with. And in saying that, people will say, well, what's the max I qualify for? And I say, what's the max payment you're comfortable with? Because I will not bury you in a house. So we're going to go over what payments look like and back that into what a purchase price looks like. And then from there, once you are all pre-approved, you're going to find a home. And then once you find a home, there's some, the formal approval based on the home, based on your situation, appraisal, title, closing, and celebrations. But we're going to backtrack a little bit to finding a home. And James is going to bring up a site that is on our website, YouFirst website, that Derek actually hosts. And
yeah, this is a website that we actually share. the credit union and me and the brokerage that I'm with. James, why don't you show them how they can click on this, and then I'd like to talk a little bit about this site after you've shown them the way to get there.
Perfect. Yeah, so there's two ways to find this. We've tried to make it as easy as we can to find it. The first way is if you go to the site and you'll see this borrow tab, you just click on that and you click on find your home. It has this little house icon to draw your attention. And then we also, if that for whatever reason doesn't work, maybe you can go down here. Let's see, I'll go this way. You can find it in these tiles down here if you just scroll down.
Somewhere there.
There's a bunch. I'm going backwards.
We have a great CE price I just saw.
There it is.
There.
Tab for our tab. Use the tab up top. But you can, here it says house centers right here.
It'll take you to the same place, whichever
Same place,
one
so
you click on.
Yeah, so anyways, go to borrow and go to find your home, the little house icon. You click that and it'll bring up this page. And like Derek said, and I'll just give it to you here, Derek.
Yeah, and we won't spend too much time on this page. We just want you to know what it looks like. But this is actually something that you can register on. You can trust in this as a source to find homes. What's nice about that this particular site is it's linked directly to the local multiple listing service. We call that the MLS. So everything that you see on our website, you'll know it's coming directly from the Wasatch Front multiple listing service.
And it's lifetime on the listing.
It is lifetime. So the
Nice.
minute something goes live, it will show up on this website. It's kind of neat because you can create your own dynamic search. You can go in and identify the specific area that you want to look in. You can put other parameters in, like number of bedrooms, number of bathrooms, size of the lot, purchase price, and you can save that. And it will automatically email you anytime something comes on the market that is within those parameters.
So if I log out and then 5 minutes later, something in my criteria shows up and I'm gonna get an email the next day saying it's there.
Yeah.
Nice.
And we can also adjust how often those emails come, because as we go into spring, more and more homes are going to be coming on the market. If you feel like they're coming a little too often and you can't figure out how to adjust that, let me know. Or if you feel like you're struggling a little bit with the parameters, reach out to me. I'm happy to help you get this set up. You can also, what's really cool is if you see a home that you're really interested in, you can notify me through this website that you have questions or that you want to see it, and we can set up a showing. So it's a very dynamic tool. It's a very valuable tool that will help you. If you're just curious, you're like, well, Derek, Heather, we're like a year out. We're not ready to do something now. Still register. This is going to be a really good resource for you. It's going to help educate you on the different homes that are coming on the market, homes that might be within your price range. So it's cool that way.
I've enjoyed it myself. I mean, I'm here. It's making me want to look at these.
I know, it's kind of,
Right.
it's almost like a game a little bit.
I tell you what, you'll get those emails, but they're not emails. We found a lot of members enjoy it. They just kind of like to see, oh, here's a house for this much that fits, and I personally enjoy it. I'll tend to look at it or click on it. When
you register, I will tell you, I'm going to reach out just to introduce myself. I want to make sure that you understand how to use it. So, but at no point am I there to pressure you. My goal and Heather's goal, James, we're just here to make sure that you're receiving that level of support and service that you deserve. And I can't say that enough. When you see my call coming in, don't worry. I'm just letting you know that there's a human behind the website, and we're there to support you as you need.
Yeah, Derek is with Exit Realty. You see him there.
Sadly, there's a picture of me somewhere on this website. Don't show that. Don't show that. But in addition to this, Heather went through this process of what to expect. The find a home part, it can be kind of an exciting part, but almost a scary part for some people. It is really important that you align yourself with a realtor and a lender, a team that are ready to work together and to support you in that process. For me, I I let people know that, I mean, there's a lot of realtors out there, there's a lot of lenders out there who can help you to buy a house. Our goal is to help you to find and purchase a home. And I really feel like there's a difference there. And so we're coming at this from a sense of service. We're here to serve you. We're not
Definitely.
here to sell you.
Yeah.
So whether you're curious or serious, give us a call. We're ready to help.
One of the things I really appreciate about working with you is if I tell you a member's comfort level of a payment is X amount, you do everything possible to make sure that we stay in there. You look at how much HOA is, you look at how much the property taxes are, and you know that I'm serious, that this is the member's comfort level of
Yeah.
payment. And don't try and show them this house that's going to take them out of that payment range. So I appreciate that.
Yeah.
So this screen is a little bit about what we went over, but something that Derek touched on that I wanted to kind of reiterate is use a realtor you trust and are comfortable with. And same thing with a lender, is interview them. make sure it's a personality match that you're good with, and that you know that that we're going to serve you the best in helping what you are truly looking for.
Yeah, you don't want it to be transactional, right?
No. No, this is like the biggest emotional purchase of your life.
It's a big deal.
So I want to go over things that variables that affect your payment. So you've got possible down payment, depending on if you go with the 100% purchase price or not. But so we've got possible down payment. You need to look at whether or not there are condo HOA fees, whether or not you're going to have mortgage insurance, whether it be private mortgage insurance on conventional or MI for an FHA loan. You're going to have property taxes, which can vary from one house to the one next door. They can be totally different. And then homeowners insurance. So a lot of times you'll, like with an HOA, you'll have insurance for the building, for your unit, but not necessarily liability insurance, or if like if you have a fire inside that you've started, different things like that. So there's also what would be called kind of contents insurance, renter's insurance, even though you're a homeowner. And then credit score, and we've got another screen that we'll go over to kind of give an idea of how much your credit score can affect your payment. And then there's such things as, do you qualify for a grant? So a grant is done typically outside of a lender. So it might be offered through the state, the county, through your work, other things along that nature. And if you find that you qualify for one, then we can use that. But it's not necessarily something that the lender itself has. And then there's also something with a typical conventional loan that you might qualify for Home Ready, and that is based on your annual income. So basically, if you make less than $80,000 a year, you might qualify for some reduction in interest rate. And if you make less than about $52,000, $53,000 a year, then there's a potential that you could qualify for a $2,500 credit from Fannie Mae to use towards your down payment and closing costs. So this is kind of an example of, if you do have a loan that has mortgage insurance, of what, how significantly the credit score can affect your payment. So these are based on a purchase price of $300,000. So you can see that if you've got a credit score of 700 and you're only putting 3% down, you might have 338 of your payment just in mortgage insurance. But if you can get that credit score up to 760, that cuts that basically in half. So credit score can have a huge impact on your interest rate and if you have mortgage insurance.
It's huge.
So in addition to your down payment, additional items that you want to contemplate when you're looking at home, and I'll definitely have you help me in here with some of these, Derek. So you've got your loan costs and you've got your escrow setup. You need to look at things such as, is there a refrigerator? Does the refrigerator need replacing soon? Does it have a washer and dryer? Different appliances. furniture that you may have in, say, like your apartment, is it going to be too small for this new home that you're buying? Do you need to buy additional furniture, larger furniture? Things such as near future repairs. So this is, I'll let Derek talk about this when you're looking at a house, things that might fall in this category.
Sure. Yeah, I'll touch on that right now. And I love this slide because a lot of times these are sort of the little things that we don't think about when we're purchasing, but they become big things after we've purchased. So certainly when we're under contract to purchase a home, one of the things that we're going to do is a full home inspection. It's highly recommended. That way we know that you're going into this purchase with eyes wide open. We'll have a third party, a qualified inspector who will look at everything inside and out, top to bottom on that home. That will come with a punch list of repairs that you might need to make in the future. It will let us know the condition of your appliances, things like your furnace, your HVAC system, your water heater, all of those things that are in your kitchen, from the refrigerator to the stove to the microwave to the dishwasher. With some home purchases, a seller may be leaving a washer and a dryer and a refrigerator. It's kind of 50-50 on the washer and the dryer. It's a little bit more often that they'll leave the refrigerator. Sometimes they're leaving them because they don't work very good. And so we kind of want to know that up front. If you're looking at new construction, they never come with a washer and a dryer or a refrigerator. They also don't come with window coverings. And so those can be expenses that you're going to want to take into consideration because, I mean, you don't want to buy a house that you can't afford to put window coverings in for 6 months. So those are things that we would definitely be discussing throughout the process. Yeah.
Other things to look at if it's a brand new home is, besides window coverings, do you need to put up fencing? Are you going to need to install gates? Do you need to finish the backyard, finish the front yard? A lot of times they'll have the front yard finished just because that's code, but not always. So things to look at. Also, if you're moving from, say, an apartment, condo to a home, are you now going to need to buy yard tools?
Right.
So additional expenses that you hadn't thought of, rakes and lawnmowers, they add up.
There's a lot to cover there. So obviously, as we go through this process, a lot of the time will be spent face-to-face with your realtor, and then there will be a lot of time over the phone and by email with your lender. Naturally, as we go in and out of all of these different homes, these are things that we'll be bringing up throughout the process.
So I don't want to get too much into HOA, but one of the things that you'll want to do is due diligence on the HOA. Is their budget current? Have they had large assessments because they've mismanaged? A lot of HOAs are, they're regulated, they are very good, but it is something to spend a little time doing due diligence on.
Yeah.
So now we're going to have Derek talk about the current housing economy.
Yeah, we're going to talk a little bit about the market, and this is going to be high elevation. So we're up at 30,000 feet here. Obviously, if we were sitting down and we were in that presentation that we talked about earlier, I would have additional slides and we'd get more into the nitty gritty all the way down to the specific neighborhood and community that you're interested in. But these are statistics that I pulled on Monday of this week. This first slide is going to talk about the state as a whole. So active listings, and this is simple. It's showing that active listings are up. You'll see in the blue box that they're up 6.5%. If we
January,
this is year over year.
Okay.
So from February of last year. So if you look over to the right, you'll see that little like white line that takes you over to last year. So this is a good thing because listings have been low. And part of why they're low is because over 60% of the homeowners out there have a loan that's lower than 4%. And they don't necessarily want to sell. So because listings have been so low, it's really helped the home values to stay strong, right? So there's been a lot of competition for the listings that are out there. So to see that they've gone up 6.5% is a very positive thing. In that green bubble, we'll see that Sold listings are also up. So sales are up from last year as well. They're up 3%. That's exciting and that's good news.
movement, yeah.
Yeah, that's great. The median sale price per square foot is also up. So when we look at homes, we don't just look at this house sold for $500,000 and the next door house 3 months later sold for $520,000, and that means good positive movement. It doesn't quite work that way because the house next door might be twice as big, which means that it actually sold theoretically for less on a price per square foot basis. So referencing that the price per square foot is up 5.2% is a very positive thing. It means values in the market haven't just stayed consistent, they've actually been going up in the last year. The months of supply is up 3.4%. Now this is also good. We want to see that number, if we're looking at it from a buyer, we want to see that going up. It means that there's more inventory on the market for a longer period of time. Now, 2.67 months is a very short period of time, though,
Right,
when you
yeah.
think about it. If we look at a normal market, a neutral market, where it's neither a buyer or a seller's market, usually we're looking at closer to 4 or 5 months of inventory. Basically, what this is telling us is if no one listed a home, we'd be out of inventory in 2.67 months.
Wow.
So we do want to see that continue to go up. And then that last bubble, what is my daughter's favorite color? Median days on market, that's actually down 12.5%.
So homes are selling quicker.
They're selling quicker.
Nice.
They're selling quicker than they were last February. And we will actually see this number continue to drop because we're going into that spring market and more buyers are coming into the market. And it will probably, for the month of March, be in the 30s. And as we go into April, it might be low 30s. It might even be high 20s. But don't let that scare you.
Yeah.
It's just something important to know. But we are already seeing homes, come on the market. There's a lot more buyers today than there were last week at this time, and certainly the month before at this time. So we are seeing really nice properties receiving offers in the first weekend.
Nice.
So that will drive that number down a little bit. This next report, hopefully with my old man eyes, I can read this, but this is again just to give you a little bit of insight on what's happening. And we have a comparison year over year. So the gray bar, the gray line is 2023. The blue line is 2024. Again, this is a report that I generated on Monday. But if you look at that very first column, that is representing all properties on the market. And we can see that they are up about 4.6% as an average, 5.7% as a median sales price. And then we've broken it out here just to give you a little bit more information. If you're interested in a single family home, then we can see that those are very similar numbers. They're up, 5-ish%.
So what I'm seeing is people who are waiting for house prices to fall, it's not falling because we don't have enough inventory for
Yeah, that's probably not going to happen. I hear that a lot. I hear people, and I know later on we're going to talk about why now might be a good time. So I'll save some of my comments for that. But I will tell you right now that prices are not coming down, and it would take a world event for prices to come down. So, and we don't have any world events on the horizon. So we'll leave it at that.
So yes, now we're to the why now.
We're right there anyway.
Right
Should
there,
have just spilled the beans, right?
Yep. No, I had that because I figured that was a really good intro into this. So when we very first started, I talked about when's the best time to buy a home. When you're ready. So that is your why now. If you're ready now, that's the first thing what we're gonna say. Next is what Derek, a lot of what Derek was just going over. So I'll let you spill your beans.
Well, here's how the conversation typically goes with me when I'm sitting down with someone. There's a couple scenarios, people are concerned. There's a lot of things that come to mind. Home values, are they going up? Are they going down? Interest rates, are they going up? Are they going down? I like to look at it this way. If you bought a house today and interest rates went up, pat yourself on the back, good job, because you locked in at a lower interest rate. if you bought a house today, and we just showed slides, home values have been increasing, they're going to continue to increase, and interest rates went down, double pat.
Right,
Because
exactly.
now you can refinance and get a lower interest rate, and you bought the house for less.
This is also what I've been saying for
Yeah.
a year now, over a year
Yeah.
now. Marry the house, date the rate.
Yeah. Well, and be careful, because I'll tell you right now, there haven't been as many people entering the market over the last couple months because of a couple things. One, fear, and maybe interest rates have prevented them from doing that. But we have a lot of buyers waiting in the wings. If you're waiting to take action when interest rates go down, you might be shooting yourself a little bit in the foot, because I'll tell you right now, if interest rates dropped a percentage, if they went down a full percent, it would be a feeding frenzy out there. We would be back to what we were seeing in 2020 and 2021. And I'm not trying to scare you, I'm just trying to educate you, but we would be back into a scenario of multiple offers, people offering more than list price, people waiving their inspections, people offering more than appraised value, people offering their firstborn or their dog or their truck, doing just about anything to get into the home. We don't want to see you go through that, but that's what would probably happen.
And you just proved with statistics that the house prices have gone up over the last year, even though interest rates have not gone down.
Right.
So
But they haven't gone up a ton, but they have been appreciating at what we typically see in a normal market, which is that 3 to 3.5%. Actually, I just showed numbers that it was 4.5 to 5.5%. So higher than a typical market, but they have been appreciating, and they will likely continue to appreciate because of the inventory situation. And that's, I guess, the world event. What would cause home prices to drop? Well, that would be if we were suddenly flooded with tons of inventory. But why and how would that possibly happen? Builders can't build them fast enough. And why in the world would all of these people who have such low interest rates suddenly decide to all sell at the same time? I just don't see it happening.
No.
Sorry.
No, I appreciate that. Thank you. So as of the moment, we don't have any questions. So if anyone does have any questions, please let us know.
Yeah, go ahead and put them in if you don't, because at this point we can send over information. So
Yep. So we'll send out the recording.
yeah, so we'll send out the recording on Monday. And honestly, if you want, you can also reply to the email, and I get those, and I usually just forward those on to Heather.
Sure.
And get in contact with one of our.
While they're contemplating maybe potential questions, let me throw this out. I think it is an absolute awesome time to enter the market and purchase a home.
I agree.
I'm not scared by these interest rates. I remember running to the credit union, this credit union, to refinance when they dropped to 6.5% back in the 1990s. And then I ran again when they dropped right below 6%. I actually am not scared by that. I think it's a great opportunity. It's a great time for buyers to enter the market. Now, certainly that's going to be based on your personal needs. And so give us a call. We'd be happy to talk about those. But actually, it looks like we do have some questions.
So we actually do have some questions. For some reason, our screen was scrolled in the wrong
Sorry about that. We
direction.
haven't wanted to ignore you.
So, can you read it?
Yeah, does this loan work for parties outside of Utah that still bank with you first?
At the moment, no. So as of today, we are just licensed in Utah, but not saying that'll change, but I keep pushing for opportunities to be able to lend outside of Utah. But if you, I do have some great lenders that they share loans with me, I share loans with them that are based in Utah that can lend all over the US. So I can help give you a referral for that.
This is from Matt. What would it take from a home inspection for you to not recommend your client buy a house? Does that ever happen?
Wow, good question.
Yeah.
And yes, it does happen. And yes, I've encouraged buyers not to walk away, but to run away from homes.
I had one a month ago that I said the same thing.
Yeah. I mean, cracked foundations, such neglected maintenance. I think the scariest for me is excessive meth contamination, where it just can't be cleaned, but you've got a gut. I've as a courtesy, I usually take my shoes off when I show a home. I've walked into homes that have been so contaminated with meth that my feet are purple from the chemicals going through my socks and touching
No
my
way.
skin. So there's a lot of things that we inspect for. Now, I don't want to scare you. Usually, every home is going to have stuff come up in an inspection. We expect that. And like I said, we just want you to go in eyes wide open. And a lot of those things or a good realtor can help you to negotiate with the seller for either repairs or concessions so that you can repair afterwards.
So you just need to weigh that out. And then
Yeah.
there's additional inspections you can do just beside the home. You can have the sewer scoped. So if you're in an area like Holiday or maybe the avenues where there are a lot of trees, you might want to have the sewer scoped.
And older sewer lines to start with.
Yes, to see if there's any tree roots in there. And then you can do meth tests.
Radon tests, lead-based paint tests. There's a lot of things that we would want to do during that inspection. But yeah, there are instances where we walk away. It's got to work for the buyer, and it's also got to work for the seller. And sometimes we can't find that win-win scenario. But the one thing I can promise you, we'll do everything we can to make sure that you know what is going on with that home before you purchase it.
Great. This is from Avery. Is it better to have a higher credit score or 15K more in a down payment if you want a lower monthly mortgage?
That is a good question. Everything goes in hand in hand. So you've got credit scores, you've got down payments. There's like what you talked about, like the property taxes may be different from one property to another. I will always advise you to have your credit in line and least amount of debts out there as possible. So if you have small little debts out there that you could pay off, that would increase your credit score. And there have been times where I've had people take part of their down payment and clear up credit, so it brings up their score. I'm gonna let Derek talk for a second.
I think that's a question better answered by Heather, so I'm not going to go because I'm not a lender. But we can see if there's any other questions that I can help address.
Well, yeah, I'll just say, honestly, the best thing is probably just to call Heather.
Right.
And they'll work with you because each person's different. And
right.
Different.
Sorry, I had to sneeze. To be honest with you, spring is getting to me.
Yeah, so call Heather and she can work with you individually.
Yeah.
Right.
Let's see, this next one is from Anna. Is it better to try and aim for a cheaper starter home with the aim of trading it later? Or is it okay to try and go right for a house you would just want to stay in for 10 to 20 years?
That is a great question. And both Derek and I will definitely have an opinion or thoughts for you on this question. And it's really about where your current life is as to whether or not spending a little bit more makes sense now,
right?
Or if it's better to maybe finish school, or you're going to be getting a promotion. So it's definitely again a whole picture situation. But there have been many times that I have suggested people do step up. It keeps their, if it's keeping their payment still where it's comfortable, but just based on their individual life situation as to whether or not that would save them money down the road by moving into a house that better suits their family needs in 2 years from now, but they're moving into it now.
Yeah, absolutely. I think that, first of all, I guess what's the alternative? If you think that you want to wait to get a bigger, better home because you don't qualify for it now and you're renting, honestly, I'm not sure that I like that option. I would rather rather than you paying somebody else's mortgage on a rental, I'd love if you can afford to buy and it means that it's the first rung in the ladder. I highly recommend that because now you're going to be benefiting from home ownership, which includes equity increase. It includes certain tax benefits. Talk to an accountant, talk to a CPA. I don't know what those might be for you, but they are there. And I've helped people into their fourth home at this point. And I've seen them propelled into homes that are just incredible, that they would have never been able to save themselves into had they just tried to set money aside and save to get to that point. It was really taking the ladder one rung at a time that got them there.
I love this next question because it means somebody was listening to me. How long will the golden ticket be valid for? Technically, the letter says 90 days, just because that's how long a credit report is good for. But if at the end of the 90 days you haven't found the right home, I will just ask you a few questions and make sure nothing has changed. Or if it has changed, if it's just been for the better. I won't re-pull credit at that point. I'll just issue you a new pre-approval letter based on the information that you state. So it's, in some sense, it's indefinite, but it will say 90 days.
Yeah.
Okay. I think that's the same question. How long from the time I get the approval do I have to buy?
Yeah. Well, and sometimes it takes longer to find the right house. You can quickly talk to Heather at the end of those 90 days and she can reissue a new letter because we don't want you to settle. When we find the right place, let's settle, but we don't want you to think that you only have 30 months to buy. I spend a lot more time than that with people. This next one looks like it's one for me. Should we conduct a third-party inspection if we're buying new construction? Absolutely. Absolutely. I've had interesting things come up. I had a home that was just under 7 figures. And this was 5 years ago, so it would probably be around a $1.5, $1.6 million home today that we did a third-party inspection for. Lots of stuff came up, little things the builder was happy to address, but the biggest thing that came up was it tested positive for methamphetamine contamination.
What?
One of the subcontractors or someone had been smoking meth while they were working on the home. So we got it cleaned. So, and that sort of stuff happens. And the builder was amazing. The builder was mortified and stepped right up and took care of everything. It was an interesting situation, but I highly recommend that third party come in and look at things for you.
So the next one, are there first-time home buyer programs or incentives available for buying undeveloped land? This person lives in a rural area and would like to buy a tiny home on a vacant property rather than buying a home. There's a lot of, so based on the way that this question is written, the undeveloped land itself actually excludes it from any land program we have available. So in order to do a lot loan, it does need to be improved land. It needs to have year-round access, and it needs to have utilities to the property. So if there are specific ones that you're interested in, we can look at those and double check to make sure that they do or don't qualify for the lot loans that we have available. And then I do have a few recommendations for lenders that might be able to help in those situations.
Great, and then I'm not sure how accurate this is, but we heard it's better to have 15% down payment to get lower interest rate and pay off extra immediately after to get PMI removed instead of directly putting down 20%.
Well, until Fannie Mae got wise to people doing that, that was true. So sometime in the last year, they actually changed those parameters, and it's not necessarily true today, but that was a secret that for a while was true.
That's interesting.
It is.
I love how creative people are. I didn't know that.
Yeah, for a long time you could put 19% down and have mortgage insurance for a month or two. It'd be a little bit lower interest rate, and then put the other percent down. And since you monetarily paid it to 80%,
Yeah.
it removes the MI. But it is also dependent on credit scores, so it's something that we'd want to look at and see if that makes sense, and if it holds out.
Let's see. Are there any new home builders that you wouldn't recommend buying from? Just right off the bat.
So super fair question. I've worked with so many different home builders out there, and enough that they're on speed dial. I've never had a bad experience with a home builder in Utah. I've heard of bad experiences, but they're not firsthand, so I definitely wouldn't throw that builder under the bus because, you know, two different people in a relationship sort of thing. But I have had just amazing experiences with home builders. And as things got really weird, you know, at the beginning of 2022 with the higher interest rates, there were home builders here in the state, and I'm sure across the country, that did their best to come to the rescue. So I have nothing but very positive things to say about the home builders that are out there. And I would say that I've worked with probably, I don't know, 18 different home builders over the last 10 plus years,
Okay.
and ranging from builders that do maybe a handful of homes a year to builders that do over 1,000 homes a year.
I'm part of a member of the Home Builders Association, so every month I go to a meeting with dozens and dozens of home builders and spend a lot of time talking with them, and then we do volunteer events and stuff. And so I spend time, you know, personally but in business situation with them. And no, I don't have anybody I would say is intentionally, like, everyone's working their buns off
Yeah.
and trying to provide really good products.
Stuff comes
But-
up though when you're under contract, and
Yeah.
that's why it's important that you have representation. That's why that's the one thing that is sometimes interesting. As a buyer will sometimes be unrepresented when they go into a home builder situation. I'll tell you right now, if I was buying a house out of state, I'm a licensed realtor in the state of Utah, but if I was buying a house out of state and it was brand new construction, I would find a local realtor to represent me there, knowing everything that I know.
Mhm.
Because when you purchase a home, it's a very emotional process. And sometimes when things get emotional, we're not quite thinking the way we would if our emotions weren't there.
Right.
The nice thing about having a team behind you, a really good lender and a really good realtor, and everybody else that they pull together from title to inspectors, et cetera, is that they're not emotional. They're there to watch out for us when sometimes we may not be making decisions in a state of mind that we want to.
So the next one is, I'm interested in a home with assumable mortgage, but it looks like you would need a piggyback loan to make that happen. What might disqualify me from getting approved? So there are some assumable loans out there, VA loans, FHA loans, and those are kind of a unique situation because in order to assume that loan, you have to go with the lender where that loan is. So say that lender is Mr. Cooper. Your first is going to be with Mr. Cooper. Now you've got to find someone who's willing to do a second on a purchase behind that first mortgage. And that is a little bit challenging. And you want to start with whoever that loan is that is now going to be your lender, and ask them about a second to start. But I don't have an end answer to that, but it is a little bit challenging situation if you don't have the full funds to pay down to what that seller owes.
In what situation would you recommend building over buying an existing construction or vice versa?
I love.
Can I
Yeah,
start
go
with
for
the
it.
first part?
Yeah.
I have a lot of first-time home buyers come to me and they want to build their first home. I'm a grandma. I've owned a few homes, and my suggestion is to live in a few homes first that you've owned and find out what's important to you. Do you need a door from the backyard to the garage? Do you want your bedrooms upstairs, downstairs? Do you want a mix? Like, having experience in a home will help you to design a home that you want to spend many years in.
I love that. I think sometimes, I mean, I appreciate this question. We are in a little bit of a challenging market. We talked earlier about inventory levels being lower. One nice thing about new construction is it creates availability for homes that you might not otherwise find. So it really kind of comes down to you as an individual, you as a person. There is that wow factor of living in a home that no one else has lived in before. You get to pick the colors, you get to pick the finishes, you get to pick. that is pretty nice. One of the disadvantages that I see, and I've seen people run into challenges with, is it takes time to build a home. Usually most of these builders are going to need, the fastest I've seen is maybe 6 months, but usually it's 8 to 9 months. And I have seen, unfortunately, situations where people qualify for the purchase price of that home when they initially go under contract in month 1, but 9 months later, because interest rates are always fluctuating, they may not qualify for it at the end. And so that can be a heartbreaking situation. So that's something to keep in mind. That's definitely a conversation that you'd want to have with Heather. And it's also a conversation that I can provide some insight on. So things like that. Plus, it's kind of cool when if with values going up, when you're building, you're going under contract at today's value. And if things continue to appreciate when you close on it, sometimes it's worth a little bit more. So there's upsides there, but there's reason to also be cautious and to get advice from a professional.
That is a very good point. If it's not something that's going to be completed within the next 90 days, I have actually several situations that I've been dealing with over the last 6 months of people that started building homes a year and a half ago, and that now don't qualify because of rates the way they were back then. And I've had to, anyways, we won't spend a whole lot of time on that, but that's a really good question. And there's a lot of factors involved in making that decision.
What should we look out for regarding HOA?
Well, there's a bunch of things that you should look out for, but first and foremost, understand that when you go under contract with a seller, there are things called seller disclosures that they are contractually obligated to provide you within a certain period of time. Usually it's within the first 3 to 5 days. And those seller disclosures include the CC&Rs for an HOA, the rules and regulations for an HOA, the most recent meeting minutes for the HOA, the budget, the financials, and also contact information for the HOA. When you're purchasing into an HOA, you're going to want to spend a lot of time reviewing those. It's challenging for me because I will provide those to a buyer, and it's a lot of information. It can be hundreds of pages long, and I see a lot of buyers not dig into that. So they're not really, they're finishing their purchase and they're not really understanding what they're buying. They know they're buying a condo or a townhome, but they don't know that they're also buying into a homeowners association. Things to really keep an eye on are assessments. If there are current assessments in place because of, maybe it's an older association, maybe the community's been there for 30 years and they're assessing for new roofs and they're assessing for new roads and they're assessing for new siding on the pool. Well, chances are there's going to be other assessments on the horizon. So sometimes we can see that in the minutes, or you can pick up the phone and you can call the association and you can ask them. The other thing that I would recommend is invite your realtor to sit down and go over these documents with you. Sometimes you don't know what you need to be looking for. You don't know the questions you need to ask. And sitting down and going over that together can be definitely beneficial. Make a list of questions, put it back on the seller, take it to the association. Just really make sure that you're doing your due diligence, that you really understand what you're getting, what you're purchasing into when you do that.
How will the recent NAR commission change impact buyers?
I'm sorry?
Oh, how will the recent NAR commission change impact buyers?
Wow, that's a great question. And we really don't know yet because nothing has been agreed to. It's been proposed. The Department of Justice is looking into that. We're looking at July as that potentially happening. The interesting thing is it's not going to affect buyers in Utah as much as it's going to affect buyers in 39 other states in the country. And that's because one of the big things that they're pushing is they're pushing for a buyer agency agreement with a brokerage. Well, we've already been doing that in Utah. It's already in place. So so it's going to change a little bit in Utah, but not perhaps as much as people think. Probably the biggest change is going to be how we communicate the compensation that a buyer's agent is going to receive from a seller that's willing to pay it. In the past, well, right now you could go to the multiple listing service and anybody can see it. It's publicly visible. It's called a BBC, a buyer brokerage compensation. Moving forward, they're proposing that that will not be visible on the multiple listing service. Now that doesn't mean that a seller won't and can't pay it. Of course they can. They can't legally force a seller not to compensate another agent to help bring in buyers. We just won't be able to advertise it there. But I will tell you, man, this is a big subject. We could take an hour just talking about this. I would encourage someone to feel very comfortable reaching out to me. I would be happy to talk to them about this in person. I would also be happy to email them the bullet points that are available that go over this, because right now what's being reported on the news is it's kind of like just trying to get people to click on things so that they can. They're really leveraging that, and it's kind of unfair. But don't let it scare you, and it doesn't scare me. If anything, I'm kind of excited about it because the changes that they're proposing, myself and many other realtors in the industry have been kind of concerned about and hoping for change anyway. So I feel like it's actually moving things in a better direction, and it will be better for buyers moving forward.
Nice.
Let's see. We have a tricky situation where we might need to change our location in 1.5 years, but we're ready currently for our first home. Should we enter this current market and maybe sell the property when the time comes and buy another new location, or just wait and buy directly to the new location?
That is a very good question. And that would be one that I would, to help give you thought-provoking questions, I would want to ask you more questions about the situation and to see what makes most sense. So I'd want a better overall view of your whole financial picture, and as whether or not it would make more sense to pay off other things now, to save. There's a lot of questions here.
It's a big maybe, but it's a great question and you deserve an answer, but we would definitely need to know more, and we wouldn't want you to put it on a public site.
Yeah. So give me a call. I would love to kind of go over that and have a better idea of the whole picture.
We can help you find an answer to that question for sure.
Opinions on new construction in outskirts versus existing house in the city?
Well, that's a really good question. So here's the deal. A lot of the new construction, the majority of it is on the outskirts. That's where the land is. That's where the land is available. That comes with some things that you're just going to have to think about. The biggest one is the commute. And we continue to build on the outskirts, so that commute just continues to get longer. Are you okay with that? I would take that into consideration. Also, when you're buying, I always encourage people, whether you plan on being there 5 years or 50 years, think about your exit strategy. What is it going to be like for me to sell this home when I'm ready to move on to the next one? And we do know that homes, while maybe older, maybe built in the 70s or the 80s or the 90s or whatever, that are on the inskirts of, I think that's what they called it, those are going to be always going to be high demand. There are always going to be people that would rather live, inside the community. But you do get a lot for your money when you're looking at the outskirts, like if you're looking at Eagle Mountain, or if you're looking out in Grantsville and Tooele County. It's a very personal question. It's a tough one to answer. The important thing to point out, the upside is you're not renting, you're owning, you're potentially building equity, things like that.
Yeah. So, and if you have kids, so one of the houses that I bought several years ago, I bought based on researching schools for my daughter, but she's 30 now. So, so you want to look at things like that, and proximity to, a grocery store, things like that. I personally prefer being on the outskirts. When I get the closer I get to the I-15 corridor, the more anxious I get. It's just busy and tight. So Derek's saying there's so many things to that question. And if you're able to work from home, look at that. Do you want to? I'm helping somebody find a house right now that they're going to be working downtown, and he wants to be able to ride his bike to work. So it's got to be something that's close enough to that. So looking at your whole situation and what makes sense for you or you and your family,
Yeah,
for that answer.
definitely. It's been a couple years since this information was made available to the public. So the numbers that I'm going to share with you, they were accurate, and I think it was 2021 when this came out. But developable acres in Salt Lake County, at that time we had less than 20,000 developable acres left. Now that's for
Wow.
everything. That's not just for building houses. That's for the roads that get you to the houses, the schools, the churches, the police stations, the fire stations, the grocery stores, the parks, all of it all. That's for everything.
Going up.
Yeah, that's why we're getting taller in Salt Lake County. In Utah County, at the time, there was over 200,000 developable acres. And in Tooele County, it was over 100,000 developable acres. So if you are thinking new construction, you're definitely going to see more opportunities in those areas other than Salt Lake County for maybe a single family home. In Salt Lake County, we're for a long time, townhomes were one level, then they were 2 levels, now they're 3 levels. And it's just because with that little of land left, the value of the dirt becomes that much more. So something to keep in mind.
Yeah. So this next question's a really good one too. What if we don't want to be in an HOA, and whether or not that's basically impossible if we're looking at newer houses? I can say for sure that it's not impossible.
Yeah.
And it is something that you definitely need to talk with the builders and see what. So I know Ivory specifically, they have some with HOAs and they have some without HOAs. So talking with the builders and asking about their different communities. And then I know in some counties, the county actually makes builders put in what's called a kind of a temporary HOA that's typically assessed at $25 a homeowner. But once all the homes in that area are complete, the homeowners actually dissolve it. You can't be guaranteed that it's going to be dissolved, but I personally am in a neighborhood that was the promise, and that is what happened. I never paid an HOA once. It was just something that was mandatory by the county, and but it was truly dissolved.
Yeah, Anna, good question. And I should back up a little bit. I hope it doesn't sound like we've been kicking at the HOAs. I don't necessarily think that a homeowners association is a bad thing.
Oh no, I've lost people that want to move in because they don't want to do yard work.
There's upsides and there's downsides to associations. But the one thing that I can assure you is with all new developments, meaning like neighborhoods, they are going to have CC&Rs in place, which are covenants and restrictions on what homeowners can and can't do. So you'll want to research those. They're probably going to do something similar to what Heather described, and that's because the counties and the cities want to assure that these new communities are meeting parameters that they're agreeable to. Where you might be able to do new construction that isn't in an HOA is when someone, and it could be one of those smaller builders that I talked about earlier, where someone is purchasing a home that has a couple acres and they're tearing down the house that was there and they're building up 5 or 6 smaller homes. My father owned 3 acres in Sandy, and both of his neighbors also owned 3 acres. Together it was just under 9 acres, and they sold all that off, and a guy came in and he's now building, I think it's a total of 12 homes. And there isn't a monthly HOA fee there, but there were CC&Rs established that had to be met per the city.
Wow, those are some awesome questions, and
The bet.
Thank you
We've
for-
never had this many.
yeah, so this went way longer than we were intending. So thank you for all those that stuck in. I think we've only even had a couple drop off. I'm impressed. So
Yeah.
And we do have one more question.
Would you recommend buying a mobile manufactured home over renting? Is it better to save more for a condo compared to manufactured?
So there is a kind of a difference between mobile and manufactured.
Mhm.
One, you need to make sure it's not mobile. And so you can have, the biggest thing that you need to make sure is that you own the land underneath.
Right.
And I kind of retracted there because like in St. George, there are some mobile homes on permanent foundations and you do own the land underneath. Salt Lake County, a lot of them you're
Same with
renting.
Tooele County. There are some out there
There's
too.
some out in Tooele?
Yeah.
Okay. So it's a big difference of whether or not you own the land underneath. And as a lender, I can't do a loan unless you own the land underneath, but I'll let Derek add to.
If you don't own the land, you're paying a lot of money in an HOA, a mobile home fee. It's usually like $900 to $1,100-$1,200 a month here in Salt Lake County. So it might look like you're getting this place for cheap, it's 50, 60,000. But when you add together what your monthly payment on the structure might be with the land costs, it's usually less expensive to get into a condo. It varies, but it's something I'm happy to talk to you about. I've had several people who reached out to me with the intention of wanting to buy a mobile home, and we've been able to actually get them into a condo or a townhome. And when we talk about appreciation of single family homes, condos, townhomes, that doesn't apply to mobile homes. So that's something to keep in mind as well.
All right, well, thank you, everyone. That was great. Thank you, Heather and Derek, for doing this. And again, we'll send out an email on Monday with all the information, recording, so you can reach out to Heather and Derek if you need. All right, thanks, everyone.
Thank you.